Good morning. It is Thursday. It is Jobless Claims Thursday, which, as we ignored them for quite a while, they are now becoming a little bit more important as the Fed decides to possibly taper. But what we really want to talk about today is a possible market correction and why it's actually good for the market that it corrects versus not good for the market. When you look at the overall picture, the market has had a tremendous rally since 2009. The market has had a tremendous rally even this year. We've only had a 5% sell-off off of the top of the market. Now, for the health and the wealth of markets, we need more volatility and more action in trading, because what happens when markets become too complacent, they tend to drift higher for no reason. The correction itself will bring back in real investors and allow real markets to freely trade versus trading off of artificial data and monopoly money that is being provided by the Fed. And if you don't think that this isn't important, each time we have had a correction or a pretty big sell-off, we have come back stronger than the time before. And you can look back, at 87, 99, 2007. But we are now at a point of the ridiculous and the sublime that the markets cannot sustain the growth that they're having, because the earnings, the real fundamentals, which we don't trade fundamentals, but the real fundamentals don't indicate that the market can be supported by the numbers that are being put out there. All you have now is the extremely wealthy taking money from the banks, borrowing at 3%, and putting it into the market. That is not helping you. That is not helping me. That does not help us trade. We've seen a big lack of volume. We've seen a lot of issues that are not allowing us to get in. We need the markets to free float, and the only way that they can free float is if we get some major correction, where we get some fear back in the market, where the extremely wealthy cannot just sit there with borrowing their money and knowing that they can actually force and push the markets higher. Unfortunately, a lot of the late money is starting to come in, and typically when the late money comes in, that's typically close to a market top, and that's typically the people that get punished the worst, because they're always in last. They finally decided that this was the last dip to try to get in, and that's a problem and an issue that is going to be caused, because once again, the average Joe that came in late is going to get pounded again in this late sell-off, because these markets are extremely overvalued right now, and they need a break. They need a breather. It'll be healthy to have a nice summer sell-off and get about 10 to 12% knocked off this market to create more volatility and to actually create more trading opportunities for you. And that's why we need a correction. Remember, if you'd like to listen to me on the radio, libertyexpressradio.com, The Bubba Show. Also, the Monday Call, Average Joe Options. I want you to email me at todd@averagejoeoptions.com, and I'll tell you how to get on, and you'll be my guest and check it out and see some of the great trades we've been making throughout the option market and how we've been able to be on both sides of the market. For Thursday, The Bubba Show. We'll talk to you on Friday.